Good day all. We members of Group 13 will present the analysis ratio for AKW 104 assignment by comparing Company A Dutch Lady with Company B Nestle. First and foremost, let me introduce my group members Zamir, Mirza, Shakir, myself Sindhuja, Ilan Damil and Dinesh as shown in the picture.
So for the trial analysis for the Dutch Trading Company, for the acid test ratio in the first year, it had 0.87 and then it increased to 0.88 and then it decreased all the way down to 0.51 in 2 years and then it increased to 0.61 and then it decreased to 0.42. So for inventory turnover ratio in the first year, it had 6.06 and then it decreased to 5.7 and then it had increased to 5.73 and then decreased to 4.83 and then increased to 4.9 and then to 5.35 in the year 2020. Okay, for the account receivable turnover in the first year, it had 12.14 and then it decreased to 11.93 and then decreased to 10.26 and then it decreased to 9.33 and up slightly increased to 9.45 and then has a huge jump to 13.5. For the asset turnover ratio in the first year, it had 2.64 and then it has huge down to 2.2 and then increased back to 2.45 and then it increased to 2.6 and then decreased to 2.52 and then decreased to 2.34. Okay, for the debt ratio in the first year, it had 0.62 and then it increased to 0.73 in the 2 years and then it slightly increased to 0.74 and then it decreased to 0.67 and then stable for that for the year 2020. For the net profit margin in the first year, it had 14.10% and then it increased to 14.20% and it dropped to 11.10% and then it increased back to 12.20% and decreased all the way back to 6.67% in the 2 years. Okay, for the return on asset, for the first year, it had 0.34 and then it increased back to 0.36 and then it decreased to 0.13. After that, it increased to 0.32 and then it has a huge drop to 0.15 in the 2 years. For the return on equity, in the first year, it had 1.57 and is stable for next year. After that, it increased to 1.65 and decreased to 1.004 and then it's stable a bit to 1.05 and then it increased to 1.4. For the earning per share, in the first year, it had 2.2. After that, it increased to 2.32 and then it decreased to 1.83 and then increased to 2.0. After that, it has a huge drop to 1.14 in the 2 years. For the current ratio, in the first year, it had 1.28. After that, it decreased to 1.2 and then to 1.02 and then it decreased back to 0.95. After that, it increased to 1.08 and then decreased back to 0.89. Okay, finally, for the debt to equity ratio, in the first year, it had 0.56 and then it increased to 2.15 and then to 2.79 and then 2.8 and then it go to 2.86 and then decreased back to 2.07 and then it increased back to 4.96. Okay, for the company Nestle, in the first year, it had 0.36 and then it increased to 0.39 and then decreased to 0.37 and then it increased to 0.38 and then decreased back to 0.27 in the 2 years. For the inventory turnover ratio, in the first year, it had 7.58 and then decreased back to 7.05 and then increased to 7.22 and then decreased to 6.0 in the 3 years. Okay, for the account receivable turnover ratio, in the first year, it had 2.91 and then it increased to 8. For the account receivable turnover ratio, in the first year, it had 8.91 and then to 8.99 and then to 9.35 and then it decreased to 9.3 and then increased to 11.04 in the 2 years. For the asset turnover ratio, in the first year, it had 2.02 and then it increased to 2.03 and then it increased to 2.08 and then it decreased all the way back to 1.94 in 3 years. For the debt ratio, in the first year, it had 0.72 and then it increased to 0.74 and then increased to 0.75. After that, it increased to 0.67 and decreased to 0.76 and then increased to 0.81. For the net profit margin, in the first year, it had 12.21 and then it increased to 12.58 and then it decreased to 12.37 and then it decreased to 11.95. After that, it increased to 12.19 and then decreased back to 10.21. Okay, for the return on asset, in the first year it had 0.25 and then it increased to 0.26. After that, it It is stable for another year, and then it decreased to 0.24, and it's stable for another year to 0.24, and then it decreased to 0.20. For the return on equity, in the first year it had 0.8. After that, it increased to 0.94, and then it increased to 1.0. After that, it's stable for 1.02 for 2 years, and then it decreased to 0.9. For the earning per share, in the first year it had 2.52, and then it increased to 2.72. After that, it decreased to 2.46 in 2 years, and increased to 2.52, and decreased to 2.07. For the current ratio, in the first year it had 0.67, and then it decreased to 0.65, and then increased to 0.68 in the 2 years, and then decreased to 0.59 in the 2 years. For the debt to equity ratio, in the first year it had 2.51, and then increased to 2.85, and then increased to 3.0. After that, it increased to 3.35, and then decreased to 3.1, and then it increased to 4.14.
Now, let's compare which company appears to be a stronger candidate financially based on the ratios analysis. Most of the ratios in the Dutch lady company recorded inconsistent ratio from the year of 2015 until 2020. Thus, the trend in most of these ratios resulted in a significant decline, as the ratios in 2020 are lower compared to 2015. From this recorded data and graph, we can see that the trend in Dutch lady company tends to show a significant decline and inconsistent value from the year of 2015 to 2020. In Nestle company, most of the ratios calculated show just a slight difference between one year to another from 2015 until 2020. The declines are progressively improving shows the tendency of the company to bounce back. Hence, the trend in most of these ratios resulted in a better consistent value, even though the trends are mostly decreased as in Dutch lady company. To conclude, the Nestle company has a stronger financial compared to Dutch lady company, as Nestle has consistent and stable trends of ratios between the year of 2015 to 2020.
Moving on, let's go through several suggestions on improving the future outlook for Company A.
First, increase the revenue. Company A can implement one of these ideas to raise their revenues. Number one, it can create a new pricing strategy that is more affordable. If the price decreases, the quantities demand increases. Company A should focus on driving long-term per capita milk consumption. For example, Company A can introduce the RM1 mini milk pack in sundry shops. This will attract more consumers on board to secure its long-term growth. Number two, it can take advantage of e-commerce, especially during this restriction period. Company A can make use of the e-commerce platforms such as Shopee and Lazada, where inside the platform they can sell all their products while reducing their cost of goods sold. Secondly, by decreasing the cost, it can cut costs on sales and marketing. As Company A is well known already, they should divert their attention to promote their product sales and promotion using a social media platform that is free and cost effective. Firstly, it can also utilize advertisement on the internet for marketing, as it can make our product reach any audience faster than before, and it can also re-strategize general and administrative expenses by lowering the bonuses or salaries of executives and employees if necessary, rather than laying them off. Lastly, by maintaining the amount of share count, Company A's earning per share decreased from 2.2 in the year of 2015 to 1.14 in 2020. When a company issues additional shares, it has a negative impact on earnings per share, such as in the case of rights and bonuses. The company has to cut its first interim ordinary EPS for reasons such as reserving the extra cash to finance its plans and absorb the potential COVID-19 impacts. Increasing share count will cause share dilution, which will reduce the value of current investors' share. Therefore, maintaining the amount of share count is a logical strategy for now. Repurchasing share, where Company A can repurchase share from the shareholders with the cash it has hand, can be done too.
Moving on, let's go through several suggestions on improving the future outlook for Company B.
The values for year 2021 are forecasted to identify the potential incline and decline in the trends and to improve the companies with effective and relevant ideas. According to the forecasted ratios, which has similar trend with comparison of year 2019 and 2020, it can be said there is a decrease in current ratio and an increase in asset test ratio, which indicates that the inventories account is firm and solid and Company B's current assets are not dependent on inventory. The current COVID-19 pandemic has become a threat to almost many companies in the country. Yet, it is noteworthy that Nestle Malaysia has invested the largest capital investment over the past 6 years in the year 2020, and it is expected that there will be a significant capital commitment in Malaysia for the year 2021 too. There are few future outlooks that has been taken into consideration to further improve the performance of Company B in relation to COVID-19 outbreak. Number 1, by enhancing its export markets, which can be done by understanding the demand for the products. Company B remain committed to continue driving shareholder value by declaring a second interim dividend or RM0.70 per shares reflects the confidence in the company in bringing another year of resilient result during the pandemic. Next, by identifying the growth sectors where Company B has identified and targeted customers within and outside of Malaysia. It has invested significant amount in building a pioneering manufacturing facility for plant-based meal solutions which will improve the sales. Secondly, by boosting online sales. During the outbreak, Company B should continue to improve online sales to ensure more profits can be gained. Firstly, by using social media to promote the brands such as Facebook, Instagram and Twitter to further reach their targets, and also by holding a virtual contest of the users posting their trial recipes related to their products. Secondly, by optimizing online site for multiple platforms by highly taking into consideration to invest in its own online store that can put in direct contact with customers, besides selling on major e-commerce platforms such as Shopee, Lazada and Zalora. This is because during this pandemic, it is obvious that strong in-home consumption continued while out-of-home channels recovered progressively. Thirdly, by providing hassle-free purchase, whereby providing variety of payment methods, indicating additional charges before the purchase of the product, lower shipping costs of free shipping and fast delivery to improve satisfaction of customers. Thirdly, by broadening the production and continuing to revitalize its existing product range by incorporating extensions into its various brands such as Milo, Maggi and Nescafe. For instance, by promoting existing products with good messaging and updated appearance, especially in the platforms where the products are not introduced yet, coming up with interesting taglines and bring beautiful storyline and testimonials about the product to improve the market sales. Next, by diversifying the product line where Company B can add new products that mesh well with existing products. Also, Company B has just introduced plant-based brand Harvest Gourmet that garnish attention from many people right now. Moving on, by targeting for larger group of customers. If Company B keep engages with strong communication campaign, effective digital engagement and continuous strong in-store execution, for instance, the Nestle Salary for Life contest, the 70th Milo anniversary celebration, the Maggi Con for Malaysia and the Rise with Nestle campaign, then it can bring more audience to reach our product. To conclude, Company B is well positioned to deliver sustainable earning for the balance of the year and beyond with its optimistic ideas.
That's all for our presentation about the analysis of Dutch Lady Company and Nestle Company. Thank you for watching.